Hello and welcome to another video on cross-border payment. In the couple last video, I went through the week one, okay, the foundation of cross-border payments. So in the day one, I look at what is cross-border payment, which after all it involves is the movement of funds between nations, and there are some challenges involved in terms of that it can be complex, as well as some regulations, some fees, and the risk involved. So the reason of looking at this cross-border payment is as a business, and despite all of this challenge, it allowed me to expand to new markets, reach new customers, and diversify my revenue streams. So with the right payment methods and strategies, business can reduce costs, improve cash flow, and accelerate growth, which is something what I'm gonna do here. So uh, in that section from the Stripe cross-border payments 101, they're gonna talk about is the type of cross-border payment as well as the trade-off involved in that as for business and the process of receiving and sending cross-border payments. So types, trade-off of cross-border payment for business, as well as the process of sending and receiving a cross-border payment. So why is cross-border payment here? So also it involves the movement of funds between nation borders, as I mentioned before. So cross-border transaction doesn't involve the customer or merchant's locations, but where the business is located and where where the card to pay was emitted. That's what actually involves that. Meaning, so for example, if your credit card it was issued in Italy and then you are buying, let's say, a specific beer, or let's say you're buying a course from Germany, okay, that transaction is counted as a cross-border payment according to WISE cross-border payment block section. Okay, so yes, and because of that, right, I also looked at the different types of cross-border payment. One of them is the ACH, okay, or the wire transfers, which is an electronic transfer, an electronic transfer fund between different banks or financial institutions. Important thing here. So this wire transfers is an electronic transfer fund between different banks or financial institutions. So whether it can be a private equity or venture capitalists or any other financial institution. So in different part of the world. So in different part of the world, wire transfer are transmitted using different wire networks. And when I ask myself, okay, what are wire networks in the banking context? Well, the type of wired networks in banking is SWIFT, ACH, FedWire, CHAPS, SEPA, VisaNet, okay, MasterCard, ATM networks, and online banking networks. And also you have in-house banking networks, which are private. So this is just to mention that one of the type of cross-border payment, which is wire transfer, okay, an electronic, uh, uh, an electronic transfer, an electronic transfer fund between different bank or financial institutions. So, for example, if I just want to know is example of financial institutions. So let me ask ChatGPT about it and then double check that information with Google. So financial institution examples, right? Bank, credit union, insurance company, investment banks, brokerage, asset management companies, mortgage lenders, pension fund, hedge fund, venture capital firm, private equity firm, microfinance institution, and stock exchange. Let me now Google this, right? Examples here. Financial institution, different type of financial institution according to Investopedia, central banks. Okay, so in today's financial service marketplace, a financial institution exists to provide a wide variety of deposit, lending, and investment product to individual business or both. While some financial institutions focus on providing service and account for the general public, others are more likely to serve only certain customers with more specialized offering. Okay, so some financial institution. Okay, so financial institution exists to provide wide variety of deposit, lending, and investment products to individual business or both. Deposit, lending, and investment products. So that's the whole point of this uh, financial institution. Deposit, lending, and investment products to individual, business, or both. While some financial institutions focus on providing service and account for the general public, so for example, like banks, okay, so banks, what it does is allows you to uh, deposit. You can also ask for loans, or they provide you investment of products, such as this uh, fixed rate. Let me see, certificate of deposit. So, for example, okay, certificate of deposit with short-term maturity. Yeah. So, okay. So, while some financial institutions focus on providing service and account for general public, like the vast majority of banks, others are more likely to serve only certain customers with more specialized offerings. So the type of financial institution range from banks and credit unions to investment banks and brokerage firms. And this is something very, very, very important. Okay, when you talk about this financial institution. Okay, financial institution. So financial institution, after all, so financial institutions, after all. Okay, so today's financial service marketplace, a financial institution exists to provide a wide variety of deposit, lending, and investment products. Financial institutions allows to or provide. This is in terms of functions. Exactly. So a financial institution exists to provide a wide variety of deposit, lending, and investment products. A wide variety of deposit, lending, and investment products for consumers or from individuals, business, or both. Okay? Okay. So while some financial institutions focus on providing service like this. So while some financial institutions focus on providing service and account for the general public, others are more likely to serve only certain customers or consumers with more specialized offering. The type of financial institution range from banks and credit unions to investment banks and brokerage firms. To okay, and brokerage firms to mortgage lenders. To know which financial institution is most appropriate for serving specific needs, learn about the different type of institution and their purpose. Eight major type of financial institutions provide various services from mortgage loans to investment vehicles. Financial institutions help regulate the economy, allegedly, allegedly, ensuring fair financial practice and facilitate prosperity, allegedly. The major category of financial institutions are central banks, retail and commercial banks, interbank, credit union, saving and loan associations, investment banks and companies, brokerage firms, insurance company, and mortgage company. Within a capitalistic economy system, financial institutions help regulate the economy, allegedly, ensuring fair financial practice and facilitate prosperity. There is no hard and fast list of type of financial institution. Title 31 of the US Code lists 31 types, while industry source lists a lot of fewer. But for most consumer and investor, these are the most important financial institutions to know about it. Central bank, retail and commercial banks, credit union, saving and loan associates, investment banks, brokerage firms. So global investment bank includes JP Morgan, Chase and Goldman Sachs, Morgan Stanley, Citigroup, Bank of America, global investment banks, Credit Suisse and Deutsche Bank. Jesus fucking Christ. Okay, okay. Brokerage firms, insurance company, mortgage company. The major type of financial institution, retail and commercial banks, internet banks. Okay. A cryptocurrency exchange considered financial institutions is complicated. It's not complicated. It's challenging then. Despite a large number of cryptocurrency investors and blockchain firms in the United States, the country hasn't yet developed a clear regulatory framework for the asset class. The Security and Exchange Commission (SEC) typically view cryptocurrency as a security, while the Commodities Future Trading Commission calls Bitcoin a commodity, and the Treasury calls it a currency. Oh my God! The Treasury calls it currency. The Commodity Future Trading Commission calls Bitcoins a commodity, while the Security and Exchange Commission (SEC) typically view cryptocurrencies as a security. So the SEC see the cryptocurrency as securities, uh, where now the Commodity Future Trading Commission see that as Bitcoin, okay, call Bitcoin a commodity, and the Treasury call it a currency. Mhm. Okay, but I just want to know is the type of financial institution, okay, What are financial institutions after all? Yes, I just want to know about the financial institution. Okay, so financial institutions exist to provide a wide variety of deposit, lending, and investment products for individual, business, or both. And that'll be all for this video. Take care. Bye bye.